Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Thursday, December 3rd, 2020. And here are our top stories. We'll take a look at the latest commercial real estate statistics and see the impact of the pandemic and converting retail sites to senior living. Well, joining me now to discuss this and more is Deidre Woolard. She is the editor of MillionAcres.com. Deidre, great to see you again. Thanks so much for joining us on the program this morning.
Good to see you.
So let's jump in because we have continuously talked to you during this pandemic about commercial real estate, and I know you and the team at MillionAcres.com just came and analyzed commercial real estate and the impact of the pandemic. So lay it on us. What have you seen and what is the analysis?
It has been a really challenging year for commercial real estate. It's very interesting right now. We really have two markets because residential real estate has been booming out of control, but commercial real estate is just very, very different. The total amount of loans is down. The projected for the year is about $55 billion. It was projected to be $95 billion before the pandemic. So really about half the activity that we were expecting. Prices also have dropped a bit. We were expecting to have a big year for pricing. That really changed. So really saw retail, as you might imagine, down by a lot. Also office buildings and hotels pricing there is very concerning.
Now, Deidre, I have been reading about, well, first of all, distressed purchases. So this would be where someone goes into real bankruptcy or someone just decides I'm out, and so they end their lease, they terminate their lease, usually a penalty, and then people come in and buy distressed real estate. What is that like? I mean, we've seen some of the tech companies. I know you told us about. I'm going to get it wrong, but I think someone buying REI's office center.
Facebook, yes.
I was going to say Microsoft, but I don't know if I'm right on that.
No, it was Facebook.
So what about distress purchasing? Has that picked up at all? Is that a sign of a potential positive here?
So distressed sales are right now about 1% of the market, but the interesting part is 3% in retail and then 9% in hotels. So hotels, there's a lot of hotel trouble. TREP recently released some data on that. There's a lot of loans coming due in 2021 in the hotel sector, and there just isn't the revenue from those hotels right now. So that's really the area that I think is the most concerning.
And would you expect in the past when you've had recessionary pressures, we've never had something like this in the modern day with a pandemic, but would you expect obviously some purchases, but also maybe some contraction? If I'm a Marriott, if I'm a Hilton, I say, okay, let me shorten my or contract my footprint a little bit.
We're absolutely going to see some of that. Certainly in New York City, they're predicting that as many as 40 to 50% of hotels could consolidate or even go away completely, just because of the impact of business travel, conferences, all of that sort of thing. So that's really a concern. Starting to see some funds building to buy up these properties, both within the hotel industry and then other types of businesses that are wondering if it's possible to convert these hotel properties into something else, potentially offices, potentially apartments, things like that. Yeah,
and we're going to talk about, I don't want to, leak out or talk about what we're going to talk about in the second segment, but possibly senior living. That seems to be an area where you can repurpose things. Now, Deidre, what about foreign investors? Because a lot of foreign investors like to come to the United States, buy United States, not only residential but also commercial. Could we see some more of that? Is that starting to pick up? Is that an opportunity?
It hasn't started to pick up a lot, and one of the biggest purchasers of commercial real estate in the U.S. In the past decade or so was China. But China has wanted to keep their money in their own country a lot, so they've been discouraging foreign investment. But you also have the impact of the trade wars and the sort of relationship that we've had with China over the past year or two. So you've seen that decrease even before the pandemic, and then increasingly now there's just not investment from China. Europe is obviously still going through its own economic problems, so you don't see as much investment. You might have seen before investment from England, but England is still wrestling with the impact of Brexit, and things haven't been finalized there. So you see a lot of turmoil around the world that then impacts commercial investment in the U.S.
Deidre, what does this mean for real estate investment trusts, which own pieces, parts, or you own a share or a unitized version of a commercial real estate? Have they been as negatively impacted as those who buy the direct asset?
It hasn't been a great year for real estate investment trusts, but it has started to pick up because of the promising vaccine news. So once we started to get 1 and then 2 and then 3 vaccines, that has really increased investment in real estate investment trusts, especially retail and hotel, which were definitely down. Sectors that have done really well this year are industrial real estate and data centers. Yeah. We're also seeing a lot of investment in life sciences this year. So that is really the breakaway segment, is seeing life sciences and some offices repurposing their buildings for biotech versus regular tech.
And that makes sense. I mean, we have the vaccine, you have people working in and around biohealth, trying to, Pfizer's and Moderna's and others as well. I guess the last question for this segment, Deidre, in terms of the bank, so oftentimes you have to get financing. Some organizations can fund a real estate venture by themselves, but oftentimes you need to get a loan either from a bank or some other private equity are buying real estate. What about banks? I mean, I would think that this has a domino effect to the banks that lend money. They may not get repaid on their loan, or if they do get repaid on their loan, it could be further down. They may have to renegotiate terms.
We have seen a few episodes of what is called, they used to call it in the last financial crisis, jingle mail, which is where the property gets returned. That's happened a couple of times in the retail sector, and one real estate investment trust has returned 13 hotels so far. So we are starting to see some of that. I mean, interest rates are still low, so there is a lot of money available, but underwriting is much, much stricter and will probably continue to be fairly strict in the coming year. Yeah.
It's going to be interesting to see, Deidre. I think every month we talk to you, we're going to have a different assessment, not because of your analytical work, just because of all the information flowing in. I want to go to
world.
It's a ever-changing world. We're even playing football games now on Wednesdays, NFL games on Wednesdays. Deidre, I'm going to go to a very quick break. When we come back, we're going to talk about possibly repurposing retail sites for senior living. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Deidre Woolard of MillionAcres.com. Deidre, thanks so much for staying with us this morning.
Thank you.
Really interesting analysis on the commercial real estate. And as we said, this is changing basically every day, month to month, year to year. We're going to see a lot of impact from the pandemic. But one thing that we kind of picked up on in your comments was converting hotels, for example, to office space or apartments or condos. One story that you and the team did, I think Mari Backman, one of your writers, wrote about was converting retail centers or retail sites to senior living. And I love this because, look, we're all getting older and we're going to need places to live. What can you tell us here? This was a really interesting story.
Well, I think we're seeing retail be repurposed for a variety of things. We're seeing it be fulfillment centers. We're seeing an increase in medical in some retail areas. And so senior living is also something that is being discussed. There's a lot of advantages to using a retail space for senior living because you really can also put doctor's offices and things like that in there. You could make a sort of a nice complex for people with plenty of room to walk around. And we've seen in other countries, some countries have used malls for memory care because you can essentially create an entire village for people. And so that's one thing that we've seen. The problem, though, is that we really have a glut still in senior housing, and there has been a real downturn in move-ins over the past year because of the pandemic.
Yeah, I mean, I love this idea of, they talk about assisted living communities, and essentially that's what you would be building within this mall. So it's basically you'd have some living area, maybe you convert the Macy's or the JCPenney to, and they're actually doing this, by the way, and I think in Oklahoma, I think it's Oklahoma City at an old mall where I think they've started, or at least they've started the project, or at least laying it out, but you convert like a flagship area into a living space. Maybe it's little apartments or condos, however it works. And then you're right, you can go to your doctor, you can get eyeglasses, you can go to the restaurant down. It seems perfectly well suited for this application.
Well, and they also tend to be in places where it's already easy to get to. So you don't have to try to buy land somewhere that's maybe out of the way and, further away from hospitals and things like that. So these retail spaces are perfectly designed for that.
And I guess it just comes down to you need financing. So you did mention that there's a glut of senior living spaces or senior centers, I guess, available. But would this be something that maybe it's nouveau, it's different, that a bank or a financier would be interested in possibly financing if it could be shown to work and the numbers kind of worked out?
I think that what we're probably going to see is it's going to be a slow track toward more senior housing because obviously we do have a lot of inventory available. So banks are a little bit hesitant, but you also have this long tail trend of the aging of America. We're all getting older. The baby boomer generation is going to need a lot of senior housing. The problem I think has happened is that we thought that people would need senior housing at one age. It actually turns out that they're more interested when they're a little bit older. So this is a trend that's going to take a little longer than I think some analysts thought to really happen, but it is going to happen.
And then in terms of existing senior centers, I mean, is that down? Is the use of those facilities down just because of the COVID pandemic? You had, obviously, our seniors are the most vulnerable in our population to the pandemic, but is that really a result of the pandemic, or is it just that there's just a surplus, we've built too much already?
Well, senior housing, it was down in the third quarter from about 85% down to 82%. So not a huge difference so far. But yeah, there is that glut, and there is that people are preferring, in many cases, to age in place. But that is something that really kind of only happens for so long. The other trend that we're seeing is the return of multi-generational living. So, before the sort of rise of the post-war nuclear family boom, you had a lot of multi-generational living. That is now back, and we're actually seeing some of the home builders build houses that have an in-law suite or something like that, and are designed for multi-generational living. Yeah,
I was going to mention that. You beat me to it. I would think with the surplus, but also home care is very difficult to get. I mean, it's home care workers turn over a little bit more frequently. They're not paid as well, and forcing families, daughters and sons and grandchildren can I guess step up and assist Nana or your grandparents. But look, I would love, and I haven't checked this with my wife, but I would love for my mother or my father and their respective others to come stay with us for a period of time. They're both in their 70s. Fully able to move and whatnot, but I would love for them to come and stay with us and be, take me back to my old days where I was a, part of the family and living in my family home.
Well, a lot of people are finding this to be a good solution. And the other thing that is part of this is you have what they call the great wealth transfer. So as people age, they're already thinking about how they're going to structure their wealth for their children. So sometimes what we're seeing is that the parents will buy the house with the children and then plan to live in one part. So there's really a lot of thinking about how to transfer wealth, how to buy real estate that can work for the family now and then work for the family in the future.
Yeah, and it just makes a lot of sense as long as you can tolerate each other, which I'm assuming most people can. You try to work out your differences, but from a cost perspective, sharing costs. You mentioned the estate planning and the wealth transfer benefits, but I think it would bring a lot of families together. And again, it's not always easy if people are living in California and New York and Washington, D.C., but I would bet that people are really starting to rethink that. And, people in general, I believe, are reducing their footprint. They're not increasing their footprint, especially if their children go off to college. This sounds like a win-win for everybody.
Well, and the other factor here is remote work. So you mentioned people moving to California or New York. A lot of people are now realizing, well, if I could work remotely, then I can be with my parents or move back home, or move them somewhere closer where we both agree on that I can also go to work. So there's really a lot of flexibility that we've seen this year. I mean, that's sort of if there is any benefit to this pandemic, which is a weird thing to think about, but it has changed how people think about what matters to them most, how they want to make their work-life balance better, and how they want to take care of the people that matter most to them.
Yeah, really, really well said. Deidre, it's always a pleasure talking with you. Really enjoy your snapshot of the commercial real estate market and just talking about real estate in general. Thanks for sharing your perspective. Have a great rest of the week, and we'll talk to you again very soon.
Thank you.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, so much more, check out our daily newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.